Hey guys, this is Market Makers, and in this video we will learn about fair value gap, which is also called imbalance or inefficiency. And we will also learn about order block, what are order blocks, what is the use of it, and where can we identify order blocks. So this video will be very interesting and important as it covers a major part of smart money concept. Okay, so let's start from fair value gap. What is fair value gap? When market forms a unhealthy price action like a sudden push up and down with big candles and strong momentum, so market creates an FVG, fair value gap, and to fill that market again retest the same areas and after that makes the next move. So let's start from the first diagram. This is a bullish trend. If you don't know how to identify trend, you can watch my previous videos on trend identification. So market had a small pullback, a down move here, and continued to move up. This is a break of structure that confirms it is a uptrend. So this move, the small pullbacks are basically occurred by the selling pressure of retail traders. In a strong trend that has good momentum and good volume and strong candles, there is basically institutional money and smart money in that move. Sometimes after this move, after market gives break of structure, it gives a small pullback and moves up, or sometimes the pullback is deep and then moves up. So it depends on the fair value gap and imbalance how deep the pullback will be. So basically inefficiency determines how deep the pullback is going to be in the trend. So let's understand what fair value gap is. I'm taking the high of this candle and low of the third candle. So you can see there is a gap between these two wicks. This is called fair value gap. Why am I taking this red candle? Because this is the first candle that took the liquidity and started this trend. So basically you need to mark the first candle's high and third candle's low to identify fair value gap. You can see over here, going to the next candle, the high of the first candle and low of the third candle. Look at this carefully. It has already filled the whole body of the middle candle, right? The high of the first candle and low of the third candle has touched together, which shows that the body of the middle candle is already filled. So there is no fair value gap here. Let's move on to the next candle. Here is the high of the first candle, low of the third candle. So you can see there is a significant gap, fair value gap, that can be noticed, right? So market tends to push the price where fair value gap is more, right? So it attracts as magnet. Market tends to fill the fair value gaps and then make its next move. You can see the wicks are touched. So there is no fair value gap here. The body is already filled. No matter the wick can be like this, or the wick can be just in the same level of the first candle's high. Even if there is a small fair value gap, like you can take example of, even if there is a small fair value gap, the market will respect that zone. So it doesn't matter if the fair value gap is small or big, it will work as it should. We call this mitigation, right? So if the body is already filled and the wick is mitigated, so we call this mitigation, right? So what is the use of fair value gap? So the use is market tends to push its price towards the direction where the imbalance is more. So the imbalance is the gap, the fair value gap. So the direction will probably be like this and then this. So this is called our extreme. This is the most extreme point of fair value gap. So we have this first fair value gap and we have this second fair value gap over here. So market tends to fill all this and then move up. So suppose if we didn't had any fair value gap over here, so market would probably tend to push its price from the nearest fair value gap. something like this, and then up, right? You just have to keep your observation level high. Looking at diagram 2, the bearish structure. How is the bearish structure confirmed? This is our breakup structure, so this confirms this is a bearish structure. Looking at the fair value gap, how can we identify? It is the low of the first candle and high of the third candle, just the opposite of bullish trend, right? So this is our fair value gap. Let's move on to the next candle. There is no fair value gap over here. You can see the wick is already mitigated, right? Let's move on to the next. You can see there is a small fair value gap over here and another fair value gap over here. So I hope you understand the high of the first candle and low of the third candle in a bullish trend. The gap between those two is called imbalance or fair value gap, and the low of the first candle and high of the third candle in a bearish trend, that is the fair value gap, which is also called an inefficiency or imbalance. So the probability of the reversal, the pullback, will be high over here. So this is our extreme point, so the probability of price reaching to that level is high and then moving downside, right? Suppose there was no fair value gap over here, then the price would have probably made its way to the nearest fair value gap, filled it, and then moved up. So probability would be like this, move and then downside, right? So market tends to fill the fair value gap and then move towards its trend. A small addition here and a small change for you to understand it better. The actual fair value gap over here is this. Previously I told you the fair value gap is over here, just to make you understand that the gap is between these two wicks. So why is this the fair value gap? As you can see, this trend started from here, everything is mitigated over here, but this candle, actually the first candle that started this down move, right? So this candle has taken the sell side liquidity. If this wick was above the previous candle's wick, then we could have taken this as a fair value gap. The actual fair value gap would be this, but here the wick is below here, that's why we are not taking that. So we are taking the fair value gap as this. You can see the wick is above this candle, so this candle has all the liquidity of the sell side, so we mark this candle's low to confirm as a fair value gap. These things are a little bit advanced, so you will learn it in upcoming videos, so this was just an addition for you. Let's move on to order blocks. Imbalance has a big role to identify actual order block that will actually work for you. You should never avoid imbalance even if it is big or small. So imbalance, inefficiency, fair value gap, all are same, just names are different. Unless you learn to identify those, you can't identify order block. So we have two diagrams over here, one is bullish and other is bearish. Firstly, you will have to see which side did the market broke the structure, so you can take trades in the direction of the trend. You can catch reversals too, but that will be a little risky. Sometimes you will see multiple order blocks, but all will depend. So firstly, you will have to see which direction did the market broke the structure towards, and then you will have to identify imbalance in that particular trend before the order blocks. So if the imbalance is present in the movement, order block has high probability to work as you want it to. So what is order block? Order block is simply the last buying or selling candle before the move. So here you can see this is the last selling candle before this push upwards, right? So this is our last buying candle before this push downwards. Order block can be sometimes doji, or this order block could have been green or doji or red, doesn't matter. What matters is the order block should have imbalance. So in this case this order block has imbalance in it, and here too you can see this order block has imbalance in it. If you had to take any trades according to order block, depending upon the order block, you would simply enter a trade on this wick, put your stop loss below the order block, right, and target. And same goes in the bearish trend, entry in the order block, stop loss here, and target. So guys, let's go a little advanced over here. you can see why I marked this candle as order block, right? Suppose this candle over here, its wick was below the previous candle, right? So what this denotes is this candle took the liquidity, all the liquidity below this move. So this would be our order block. We would mark this candle as our order block, and our entry would be this if there was inefficiency over here, and our stop loss would be below this order block. So we have a stop loss quite a bit big, so to minimize that we would go in a lower time frame and refine the order block, look for inefficiency and enter the trade, right? Suppose in the bearish trend, let's see, suppose this wick was higher than the previous candle's wick, then this would be our order block, and we would enter our trade over here, and the inefficiency would be this, right? Here you can see inefficiency would be here if this was our order block. So you will have to see for inefficiency to enter in the order block. After breakup structure, look for order blocks, look for inefficiency in that order blocks, and enter your trades. So this is something advanced, guys. You will have, this is something advanced but not confusing. Just put your little bit of mind into it, then you will understand it. Sometimes the price will mitigate the full body of the order block. Sometimes it will just touch the wick and then move up or down. So you will have to look for imbalance. Guys, I need your attention over here for a while. In this area, you can see there were two last buying moves before this sell, right? So why we did not mark this as our order block? You can see this has no imbalance, right? So if this candle after here would have any imbalance, then we would consider this as our order block. So it has no imbalance, and this is already mitigated with this move, right? So that's why we take this move as our order block. So guys, your order block can be formed anywhere. It can be formed over here, or it can be formed over here, or anywhere. So what if in a single leg there is 2 or 3 order blocks? So in that case you will have to look at the extreme order block which has fair value gap. So right, you will take the extreme order block as high probability. Other order blocks can also work, but you will have to find the imbalance in them. So in this video I am teaching you how order block looks and how you can identify them. I will teach you in upcoming video how you can take trades according and relying on order blocks with high probability and high risk to reward trades. Let's see some examples in the charts now. Okay guys, this is the chart of Euro USD in 15-minute time frame. The smart money concept will work in every time frame, right? So the example of order blocks in the live chart are here. Let me tell you something additional. The first important thing is order flow, then imbalance, then comes order block, right? So sometimes the price taps at the order flow and then falls. So order flow here is this one, the last buying move. I will be uploading videos on that very soon. So let's see some examples of order blocks over here. So right, sometimes right here you can see this is our last buying move before the sell. You can see this is our order block. You can see this one is mitigated already. This one was mitigated by this move, no imbalance. Here we have imbalance, a small one, right? You saw here price respected this range quite nicely, right? So this is our first order block, right? So let's head on. Market broke, gave breakup structure. You can see there is another order block over here. This has taken the liquidity. The wick is higher than the previous candle. This is our order block, right? So some order blocks are also trap. Those includes inducement and everything like that. So I will be updating you guys on that. I will be posting videos on that, right? So you will have to take trades according to the trend, right? You will see some bullish order blocks, some bearish order blocks. So every order block is not there for you to trade, right? So all the order blocks that are formed, that looks juicy and nice structured, that are just traps for use, for you, and you have to avoid being the liquidity, right? You will have to trade with the trend. This is our buying order block which has imbalance too. You can see this also respected and price gave a small move. Those who bought here waited for a big target, their stop loss hit. So trap works like this. You have to trade the trend. So the price is in a bearish trend, you have to see only sales, right? So this is our order block. This also respected once, two, three times, right? So our order block in this internal structure is over here. This is our order block with imbalance. You can see this worked pretty well, right? Price will tap to your zone, give a small reaction, and then hit your stop loss. That is what smart money trap is called, right? You can see over here too, this is a buy order block. It has small imbalance, it gave a little reaction and hit the stop loss, right? So you can see this is also a order block. This is based in a single candle mitigation entry. If you enter this trade depending on this order block has taken the liquidity, it has imbalance too, and the price came, the wick mitigated this order block, this wick over here, and then price fell down, right? So I will be posting videos on single candle mitigation too. Just stay tuned guys, there is a lot of interesting and powerful stuffs coming which will help you improve your trading skills, and you will get high risk to reward trades, and your trading will be very easy, right? So these are the examples of bearish order blocks. You can see this is a main order block, this is a bullish order block, this is a bullish order block. It is probably a trap. Let's see if the price respects it or not, because the price is in a bearish trend, right? So it will probably give a little bit reaction and hit the stop loss, right? You can see the price gave a little reaction and then headed down, hit the stop loss. As you can see, this is the smart money trap. So you will have to see the trend before, and then imbalance, and then order block. So guys, order blocks work pretty well in every chart, even also in forex, crypto, stocks, everything, in every time frame. You just have to identify the right order block in right trend, right? So I will teach you to how to take trades according to order blocks, which will give you high risk to reward, 9 hour, 10 hour. So stay tuned for upcoming videos. You can also recommend what kind of videos you want to watch, so you can join our free Telegram channel. So